Good evening, traders. Hope you guys are doing well. Hope everybody is enjoying this volatility that we've been getting this week. And I hope everybody has been managing your risk appropriately, more importantly. So I have another daily recap for everybody. So let's not waste any time and dive right in. So you can see here, we have my trade plan for Thursday, November 5th. And for those of you who are not familiar, I release these trade plans for free every day in our Facebook group, which you can find down in the description, along with links to our website, where you can find access to one-on-one mentorship with me. You can find access to our proprietary indicator package, as well as our private Discord community, where you can watch me trade every morning, Monday through Friday, starting at 9:30 a.m. Eastern. Now, with that said, let's get into the key levels. So first key level today is a fun one. That is 35.41, which is the all-time high. Now that, we'll go over to the profile real quick, and you can see that we have all-time high right here, 35.41 from the week of October 12th. Let me just make a quick adjustment so you guys can see my crosshair a little bit better. All right, that should work. So this was first key level here. Second key level was 35.0850. That was the overnight high from the most recent session. 34.9625. That was the November 5th overnight volume point of control. Next level was 34.80, which was the November 4th range high. And the next level and the last key level was 34.55, which was the November 4th point of control. Now, of course, we still have the elections going on, no results yet, so I left that up as an extreme high impact event because we do have significant headline risk with something like that going on. We also had FOMC today, which created a little bit more volatility in the afternoon as well. So with that, let's get into the summary. So my thoughts were that overnight inventory was net long once again, and we can check that out by going back to the profile. We can go look at ES. And you can see that settlement was all the way down here at 34.35. So the overnight profile, which was right here, was significantly above settlement. So overnight inventory was long. When overnight inventory was long, the general consensus is to look for New York session to fade the overnight inventory. And in this case, because it was long, we were looking for a fade to the downside. However, you can see in my trade plan that I say the following. Today, I will be looking for acceptance above the overnight volume point of control at 34.9625. Since overnight inventory is long, I will be looking for the higher probability play, which is for New York to fade the overnight to the downside. However, because of the elections, we have not been seeing the higher probability play occur these last few days. If price can hold above the overnight high volume node or high value node and use that as support, I'll be looking to take longs up to higher profile levels and ultimately to a new high. If we cannot hold above that level, I'll be looking for downside targeting levels from yesterday's profile. So as you guys can see here, we opened up this morning around that 34.92 level, and we opened up above yesterday's range, which inevitably means we opened outside of value. Now, when a market opens outside of the previous day's range and is accepted, conditions have changed and the market is out of balance. At this point, one of two scenarios is possible. One, the market will continue to drive in the direction of the breakout, which in this case would be upside. And two, the market will begin to auction back and forth at these new price levels. So what we got today was option two. The market proceeded to auction back and forth between these newly found price levels, and we got acceptance above yesterday's session or yesterday's profile range. So with that said, the type of open that we got in regards to profile structure was an open rejection reverse. Now, an open rejection reverse is characterized by a market that opens, trades in one direction, you can see we traded down, and then meets opposite activity strong enough to reverse price and return it back through the opening range. So that is exactly what happened here. You can see we opened, pushed down, met strong buying activity, which pushed price back through the opening range. Now, what Jim Dalton says about the open rejection reverse is that the initial extreme is established when buying or selling in one direction dies out, the auction stalls, and opposite activity begins to auction price in the other direction, which in this case was to the upside. This type of open, the open rejection reverse, is less convinced of its direction when compared to the open drive and the open test drive. Because of the lower level of directional conviction, initial extremes generally hold less than half the time. And that's not to say that the opposite activity strong enough to return price back through the opening range is insignificant. However, in terms of gauging the strength of an extreme and accessing the day type that will develop, the early entry of the other time frame or the higher time frame players in the open drive is much stronger than the late entry of the open rejection reverse. So we'll get into an open drive a little bit more in depth in future videos, but it's something to keep in mind. I want to plant the seed with that profile structure as well. So let me flip over and we'll show you guys an example of an open rejection reverse profile structure, and then we will compare it to today's profile structure. All right, so what I have on the left here is an example of an open rejection reverse profile from the book Mind Over Markets. Now, as you guys can see, that we have a very similar profile today over here in today's session. So let me zoom in a little bit so we can get a closer look. All right, so let's look at the book example first. So the open rejection reverse, let me read the description. Through C period, the market appeared strong and well on its way to a big move to the upside. Less experienced traders often get so caught up in the swift price movement that they jump on board thinking that a prime buying opportunity might be slipping away. It's important to remember, however, that open rejection reverse activity conveys a much lower level of conviction. Understanding this lack of conviction, combined with the patience and the discipline to wait for the market to rotate back to you, will come through experience. So you can see that this is actually an open rejection reverse in the Swiss franc on August 29th, 1987. So you can see we open here, and then we almost instantly begin trading in the downside direction. So we begin trading to the downside. You can see we move to A period here. And then in A period, we see strong buying pressure. Price moves up, A, B period. Price is still moving up here in C period. Price is messing around, E, F, G, H. Price starts to move down, back through the opening range, and ultimately below the opening range. Now look at today's profile. We have the open. We have price move down in B period. I don't have an A period on my profile, so the letters are going to be a little bit different, but the idea is the exact same. We open, we move down, and then we see buying pressure, and then price moves up. B period, D period. There's no C period because C is the current price or the closing price if it's closed. So we go from B to D, and then obviously through the regular order of the alphabet. So you can see that we spend time here, E, F, G, H, and then we move down, I, and we go through opening range once again, and we complete that open rejection reverse profile structure. So this is really powerful when you can tell from the profile structure, from the open, how we open, where we open in relation to the previous profile structure, what we're likely to do. When you see something like this, when we open out of range and out of value, and then when we have something like an open rejection reverse, all signs are pointing to a lower conviction day, which means we're less likely to have a trending day, and we're more likely to have a ranging day or a bracketed market, as Jim Dalton would say, which is essentially just trading within two established levels or established brackets in the market. So I know that was a little bit of a tangent, so let's go back and let's check out the trade plan, and let's see what happened in today's session throughout trading and in relation to the targets. So let me get rid of this. We'll go back to the trade plan here, and you can see if we scroll down, upon open, I was looking to see if we were going to get acceptance above 34.9625, which was the overnight high value node or high volume node from the most recent session. If we can hold above that level, I would be looking for a move back to the overnight high and higher weekly profile levels from the week of October 2nd. If we could not hold that level or above it on open, I would be looking for shorts back to profile levels from yesterday and earlier in the week. Now, the summary in regards to the line in the sand and the targets are as follows. The line in the sand, as you guys can see, was 34.9625, which was the overnight high volume node. Now going back, you can see this is what I was looking at right here. This is the high volume node from the overnight. So I was thinking if we could hold above this, we would at least revisit this overnight high and likely higher profile targets. So line in the sand was 34.9625. Upside targets were 35.01, 35.14, 35.20, 35.31, and 35.41. Downside targets were 34.93, 34.87, 34.80, 34.71, and 34.55.75. Now, let's go back to the profile and we'll take a look and we'll see how things transpired. So again, we opened, we moved down, and then we saw buying pressure in B period, D period, E period, etc. We spent some time up here finding value around the overnight high, which is very interesting because you can see that the overnight high from last night turned out to be one tick below today's point of control. So we had clearly some ranging today, and with that ranging price action, we hit a bit of targets on both sides. So the first downside targets that were hit were the 34.93 level and the 34.87 level. Now, if we go over to our weekly profile, you can see that I was looking at the 34.9375 level, which is the weekly high from the week of October 19th. So the second target that I had today was 34.8725. Now, 34.8725 was actually not a profile level per se. It was another high value node or high volume node from the overnight session. So I was looking at this area around here, and we actually didn't end up getting any lower than 88 today. And you can see that we just missed hitting this target by about a point, and today's low ended up being 34.8875. So I'll just go through quickly the next downside targets that I was looking at if we did move further to the downside. So the next downside target I had was the high from the November 4th session. That was 34.80. Downside target after that I had was 34.7175, which was the value area high from that very same session on November 4th. And the final target that I had was actually this 34.5575 level. Now, that was my final downside target because it was the point of control from yesterday's session, November 4th, and it ended up being a naked point of control until it was tapped in the overnight session. So with those downside targets discussed, let's see the targets to the upside that were hit. So just to reiterate, this right here was our line in the sand. Okay, so I'm just going to mark this off. So this is our line in the sand level. Okay, so essentially profile plan said if we could hold above this level, we would see higher profile targets, and if we moved below, these are the targets that I was looking at right here. Okay, so we hit a couple of targets on both sides essentially. We actually, to be precise, we hit one target to the downside and we hit 3 targets to the upside. So the first upside target that we hit was 35.0150. Now going over to the profile here, you can see that 35.0150, now this is the weekly profile, mind you, 35.0150 was the initial balance high from that week of October 12th. So that was my first upside target that we got hit. I wouldn't say too quickly, but we got hit in, let's see, we did hit it in B and D period, so fairly quickly, but not right off the open. Now the second upside target hit was 35.14, and 35.14 was a Fibonacci pivot level, and as I mentioned in my previous video, I use Fibonacci pivots quite often as targets when I don't have profile levels in the vicinity. So my next 2 targets were actually not profile levels. The first one at 35.14 was a Fibonacci pivot, and the next one at 35.2025, as you guys can see here, was actually a VWAP deviation. So let's go over to my regular chart actually, and I will show you guys how this worked. So you can see that I have my VWAP deviations here. I have third upper, third lower, second lower, second upper, and then I have the first upper deviation of VWAP and the first lower deviation of VWAP, and then I have VWAP itself right here. So VWAP is a very, very important level, and its deviations are very, very important levels that you can take trades off of, manage risk off of, and get into trades where there are likely bigger players, institutions, etc., getting involved. So with that, just to show you guys quickly, the VWAP does move around a little bit. So my target was this VWAP. Let's see if you can see it. It was when I made the trade plan. It was at 35.20.25. So right around this level. So you can see that price came up to 35.20.25 and actually got up to 21.75 in this instance, and then broke down. So that was a nice level for me because that actually ended up being 2 points or 2.5 points below the high of the day. So it was nice to have that level there, supported by the volume weighted average price, or the deviations, the standard deviations of the volume weighted average price, which can be seen as echoes to the VWAP. Now I will do likely a separate video on my VWAP indicator, but that indicator is a tool that is included in the Trading Network proprietary indicator package. And briefly what that does is it tells me within specific probability percentages where price is likely to bounce and reverse. So for instance, 99% of price action is contained within the red deviations. I'll give you guys a visual. 99% of price action is contained within the red deviations. 96% of price action is contained within the yellow deviations, and 68% of price action is contained within the green deviations. Now that's all that I'm going to say about that for this video, but just know that it's a very high probability tool to take trades off of, and that is why I used it as a target today. Now moving back on over to the trade plan here, you guys can see that we got 3 out of 5 upside targets hit, and we got 1 out of 5 downside targets hit. So the 3 out of 5 upside targets hit were 35.01, 35.14, and 35.20.25. The 1 downside target hit was that 34.93 level, and then of course we were about 1 point away from getting our second downside target hit. Now, going back to the profile, you can see that we had a really orderly day moving between these profile levels. So going back to my chart here, sans the indicators, you can see that we opened up in this area, we probed downwards, and then we reached an area of buying pressure and continued to move up. And then, as discussed in the open rejection reverse, we then moved back down through the opening range. See? This is indicative of the exact profile structure and price action from that type of open and profile structure. And once again, you can see how orderly these levels were. You can see the line in the sand is right here. Open was right in this area. We moved through the line in the sand. We moved above through the overnight high, hit our first few targets, and then proceeded to move back down. Very, very orderly through these profile levels. Very orderly. You guys can see when I move the chart here that price respects these levels significantly. And you know, this is obviously the overnight session now, and we're still respecting these levels, playing off the line in the sand, playing off the initial balance low, playing off the overnight high. All of these levels are relevant and extremely valid for trade setups. So I really hope that you guys are finding value in these videos, because I very much enjoy discussing market profile, talking about the different types of structures, the different types of opens, and really what this information means, and furthermore how we can use it to our advantage on a daily basis trading these futures markets. So if you guys do enjoy this content, please feel free to like and subscribe below, and also check out the links in the description where you can find access to our free Facebook group where I release these trade plans on a daily basis every morning at New York Open. You can also find a link to our website where you can find access to our private Discord community where you can watch me trade every morning, Monday through Friday, starting at 9:30 a.m. Eastern. You can also get access to private one-on-one mentorship with me. In addition to that, you can find links to purchase access to our proprietary indicator package. You can also find access to our Fundamentals of Futures Trading course, which is newly released, which is a comprehensive course on trading futures that describes multiple strategies that we use on a daily basis that made us and help us stay consistently profitable traders. Thank you guys again for taking the time to be a part of the trading network, and I look forward to seeing you guys in the next video.